Are you a successful online business owner, but you struggle to manage the day to day finances in your business? You're really good at making money, but you're not so good at paying yourself and preparing for taxes and figuring out how to move that money into actual wealth building accounts? If so, you're not alone. I'm going to walk you through how to set up your business financial operating system. So that way you can manage your finances in just a couple minutes each and every week. You'll be able to pay yourself more consistently, avoid tax surprises, and ultimately reduce stress and chaos in your life running the finances as a business owner so you can get back to doing whatever it is you're so good at doing. The reality is you have a system for every other aspect of your business, whether it's marketing, onboarding, sales, etc. You've got some type of system and workflow, but when it comes to your finances, you've just kind of been winging it. So that's what we're going to solve here today. I'm Justin Green, a certified financial planner, and I help online business owners in their 30s and 40s build wealth and become multimillionaires. If you want to connect with me, go over to Instagram, follow me, Justin Green FP, where you can actually DM me and have conversations with me, ask me questions. That is the best way to follow along with what I've got going on in the business and in my personal life. In this deep dive training, I'm going to show you exactly how to set up your business finances. Here's exactly the step-by-step breakdown of what we're going to go through. So the first thing is you're going to need to define and understand your business entity. The second part is we're going to look at optimizing your bank accounts. The third part, you want to track your cash flow, then set aside some money for taxes. And finally, how do you actually pay yourself? All right, let's dive in. So the first step is understanding what type of business structure you are. Now, I'm not going to cover all the different business structures, but there's three common scenarios that I run into with online business owners that I'm going to present to you and just kind of show you the differences. And then these are going to come up later in other steps, which is why I want to define them right now. So the first and simplest form of running a business is being a sole proprietor. What this means is simply you're running your business as Justin Green. You're not Justin Green LLC. You just bill people as an individual. There's no asset protection. You don't have a business bank account, nothing like that. Just solely yourself as an individual. Now, obviously, as you grow your wealth, having asset protection is a necessity. And so that's where becoming an LLC comes into play. This is a more legitimatized version of running your business. So you will go to your state's website and file for a limited liability corporation. And all this really does is it says like, okay, you're no longer just operating as Justin Green, you're operating as a separate entity, another business. And so Justin Green and Justin Green LLC are no longer the same thing. We have two different entities here. And for all that asset protection that you get, you obviously have to treat them separately. I'm not going to dive into the specifics on how that works in this video, but let me know if you want to learn more. So an LLC will give you that asset protection that you need because you're now a separate entity. It also allows you to sign up for an employee identification number or what's called an EIN. And this will allow you to open a business bank account, which is going to be huge in later steps. Now, an important note. An LLC does not save you on taxes. This is one of the most common myths on the internet is that having an LLC allows you to take business deductions. But the reality is you can take business deductions as a sole proprietor or an LLC. This does not matter. So it will not save you on taxes. You're eligible for legitimate business deductions regardless of which of these structures you are. And then the third one is still an LLC. This is commonly confused. It is an LLC, but you're going to elect to be taxed as an S Corp with the IRS. And the reason that individuals will do this is because there are tax savings to be had by being an S Corp, which we will also get into later in the video, but it's important to understand which of these you are. Now, if you're listening to this and you're not sure which one you should be, normally when you're running a business and you know it's got some legs behind it, you should probably at least be an LLC. Once you're at around $75,000 to $100,000 in profit, not revenue, profit, then the math starts to make sense on becoming an S Corp, but you should always run the individual numbers for yourself with your financial professional. All right, so the second step is going to be to optimize your bank accounts. Now, most people will just go to a Bank of America, Chase Bank, Wells Fargo, whatever your local bank is. They'll open up a business bank account. They kind of just operate based off of looking at the account and seeing that there's money there. But there's no ability to anticipate or project when you're doing that. And so I like to set up what's similar to a profit first system. If you're familiar, there's a great book, Profit First by Mike Michalowicz. I've adapted it a bit based on what I've seen work with online business owners. But there's also online banks that make this super easy for you. For example, I use a bank called Novo, and they allow me to create reserves all within one single account. The other option here is to open up multiple different accounts to have different buckets where you store your money so that you don't open your account and see one big sum of money, but don't realize some of that's for your taxes. Some of that's going to get paid out to contractors. Some of that is for your next paycheck, etc. This will allow you to actually bucket the money to see what's available, what's kind of earmarked to be used, and will simplify and organize your cash flow significantly. This is the biggest step. If you have issues with being surprised by your tax bill at the end of the year, this is one of the biggest steps that will help you. So what you'll do is you'll open up multiple different accounts or use an online bank that does this for you. I use Novo. There's a bank called Relay. They're really good as well. If you are going to use like traditional banks, just be aware they often will have account minimums and fees associated with that. So if you open multiple accounts, you could be getting hit with, $10 to $15 fees on each of those accounts if you're not holding enough money in there. So just be advised on that. But what you're going to do is you're going to need at least a tax savings account and at least an operating expense account. I would also advise some type of pay yourself account as well. Now, for me personally, I think the tax account is the most important because I run into so many online business owners who are either behind on taxes or surprised each and every year and don't have the cash flow to pay for their tax bill. You can set these accounts up to automatically distribute 30% of your revenue straight into this tax savings account and take it off the top immediately. And if you do this, you will almost always be prepared for tax season. You might owe a little bit, you might get a little bit back, but at least you've got a pretty good ballpark estimate. And you can work with your financial professional, or you could reach out to me to schedule an introductory call. This is something I do for my ongoing clients of projecting what they're going to owe to figure out exactly what you're going to owe rather than just a 30% estimate across the board. But if you don't do that and you just do 30%, you're probably going to be at least in a pretty good position. All right, so the next step is actually listing out what your business expenses are. And the reality is that as an online business owner, you can keep your expenses pretty low. So most of them are going to be recurring. So you should know each and every month what you're going to pay. But you are going to have one-time expenses, annual expenses, et cetera. And you should list those out as well. It's super important to know each and every month like what your burn rate's going to be and what you're paying out to vendors, suppliers, software, et cetera. And this actually shouldn't be that hard unless you're treating your business like a personal piggy bank. And if so, it'll take a little bit longer. But this is a step that is actually crucial because you need to separate all personal expenses out of your business. They should no longer be running through your business. That's a big no-no. And this will make your life a lot simpler, a lot easier, and remove the chaos that's in your bank account. And these are your operating expenses. So you'll know how much you need to maintain in your operating expenses account each and every month. I also recommend having some type of buffer. So this could be 3 months of operating expenses sitting in that operating account. This could be 6 months if you're just like, a little bit more comfortable with that. Whatever it is, you should have some type of buffer sitting in that operating expense account. And then the third thing you want to do is understand how much do you need to pay yourself. And so this means like, what does it take for you to pay your personal lifestyle? So your personal bills, your mortgage, your rent, your car bills, your student loans, your credit card bills, your groceries, your kids' schooling, etc. Like, what does that entail? Plus, don't forget to add on, what are you saving and investing for your financial goals, right? Are you putting a couple $1,000s into a SEP IRA? Are you putting a couple $1,000s into a brokerage account? Are you saving for your kids' futures, etc.? Make sure that's also built into there, because you need to know exactly what you need to pay yourself, because it's often the personal cash flow that will actually hurt your online business because you're just taking too much money out of the business. So listing this out, understanding exactly what you need to pay yourself will allow you to create a paycheck from your business. And now the reality is your taxes, your operating expenses, and what you're paying yourself should not equal more than 100%. Because if it does, then you've got a big problem. And whether it's a big problem today or it's brewing, it's going to be a really big problem for you, because that means you're overspending. You don't have enough income or profit coming into the business to support your spending and your paying and what you need to pay yourself. All right, so that leads us to the third step is you need to track all money coming in and out of the business. Now, for tax professionals, financial professionals, they call this bookkeeping. And what I find is that most business owners will do this towards the end of the year. They'll kind of race to catch up and get it all done, send over their accountant for taxes. But the reality is knowing your data in real time, weekly, monthly, will be extremely important for making decisions in your business and figuring out how much you can support on spending, investing, etc. Now, if you don't have a system for this, most people will use just simply a spreadsheet, pulling in their income, their expenses. They'll use QuickBooks, the most popular bookkeeping software out there, or they will hire a bookkeeper and delegate it. You can honestly probably do this in 5 to 10 minutes each and every week. If it takes you longer than that, then you probably, it is one of two options. Either one, you have way too many personal expenses coming through your business and you need to get those out. That's just overcomplicating it, and you can't run your business that way. Two, you may just have so many transactions that, well, it is time for you to hire and delegate this to a bookkeeper. But if you're running an online business, you can probably do this in 5 to 10 minutes each week, not be stressed out, have the numbers that you need to make decisions, and just kind of move on from there. Also, the bank account Novo that I use does actually allow you to do bookkeeping in their software, so you don't even need to get an additional software. So I don't have a referral code or anything for them. I do like them. I would recommend checking them out. Relay is another really popular one for an online bank, but I do think checking out online banks, they have great technology compared to the traditional banks. They're really good options for running your business bank accounts. All right, so the fourth one is to actually pay the IRS. So most people, even if they are setting aside tax money, which most people are not, well, they don't pay the IRS. And the reality is the IRS, if you were to have a job, the IRS takes money out every single paycheck. Well, as a business owner, they don't have access to your revenue. So what you're going to need to do is actually make an estimated payment. And what they say is they want these quarterly. However, they fail to actually make the due dates quarterly. So they're January 15th, April 15th, June 15th, and September 15th. So you'll see April to June is not a quarter. It's only 2 months. I don't know why it's like this, but they call it quarterly estimated tax payments. They're not actually quarterly. Those are the due dates. If it falls on a weekend, it'll just be bumped up to the Monday. So sometimes it's like April 17th, etc. But making these payments is actually pretty simple. All you have to do is go to irs.gov, create an individual account. You can sign in and make an estimated payment right there. And if you're not working with a professional, you could simply take that 30% that you've now saved by optimizing your bank accounts, and you can make that tax payment. Or if you're working with myself or a tax professional, we can figure out exactly how much you're going to owe, and we can make the quarterly estimated payment to be more precise to what you're actually going to owe in taxes. And just a reminder, this is something I do with all my private wealth clients. So if you want to learn more about that and working together, just go ahead, click the link in the description. We could schedule a free introductory call to learn more and see if I'd be a good fit to help you out. All right, so the next and final step, you got to pay yourself. So many business owners don't pay themselves, or they just kind of wait till the end of the month and whatever's left over, they just get the scraps. And that is not the way to run a business. That makes you like the worst boss ever. And the whole point of starting a business was to have financial freedom. So let's build what you actually need to pay yourself into the plan. So there's two parts to this, and it's going to be different based on if you're a sole prop or an LLC, or if you're an S Corp. So I'm going to dive into the differences there. But the first thing you actually want to do is create a monthly paycheck. Now, you could pay this out weekly, you could pay it out bi-weekly, whatever. I don't really care. But you should know what you need to pay yourself monthly, each and every month, to support your lifestyle and your financial goals. Now, if you're a sole prop and an LLC, this is actually as simple as just transferring the money from your business bank account to your personal bank account. I get this question all the time of like, but how do I actually pay myself? And it always shocked me because I'm like, oh, that's like you literally just transfer the money. So there's nothing more you need to do there. Now, there are some nuances if you're an S Corp. So in order to be an S Corp, the IRS says you have to pay yourself a reasonable salary. Now, what they don't do is define exactly what that means, But a good rule of thumb to think about is what would it cost you to replace yourself in the business? Because that takes into account for your location in the country, your experience, the hours and effort that you're putting into the business. So how much would that cost if you were to replace yourself? And the reason the IRS wants you to pay yourself a reasonable salary is because any profit above and beyond the reasonable salary is avoiding the 15.3% self-employment tax. So that's how you save a significant amount of taxes by becoming an S corp. But the math really doesn't add up until you're about 75 to 100K in profit, just because there's additional costs. There's the admin costs of doing a business tax return. There's just different costs that you need to consider. And I would run that by a financial professional before you make that decision. But just know, if you are an S corp, I've seen S corps who come to me and they're not paying themselves a reasonable salary because nobody told them this. You do need to pay yourself a reasonable salary, but that doesn't have to be the amount that you need to live off of. So for example, if you're running an S corp and you have $250,000 in profit, and let's say you're paying yourself $100,000 in salary, but you need another $60,000 to live off of, you can pay yourself that salary amount, 100,000 divided by 12, so do it monthly, and you could supplement by just transferring money over as a distribution to yourself. So you could do another 5,000 a month. You have to run your salary through a W-2 provider. So a popular platform called Gusto would allow you to pay yourself a W-2, and that would be your reasonable salary. And then just like a sole proprietor or an LLC would do, you just then transfer the remaining amount to yourself. So it's a little bit more nuanced for an S corp, just keep in mind. But you just want to make sure that you are actually having a plan for how much you need to pay yourself, and you're consistently doing that each and every month. And now you might be thinking, well, what if I do like really well? My profit exceeds the amount that I said I was going to pay myself. Then what you want to do is go in quarterly, look at the amount of profit you made, and if there's an excess amount, pay yourself a quarterly bonus, right? That's what they would do in corporate. So run your business like a business. And if there's more left over after what you've agreed to pay yourself, then quarterly you can distribute that amount. You don't need to live every month off of this fluctuating amount, this up and down amount of money that's coming in. Create a very smooth track of what you're paying yourself. And then quarterly, you can just kind of replenish that if needed with the quarterly bonuses. All right, that's 5 steps to putting together your financial system in your business. This will help you pay yourself more consistently. This will help you avoid tax surprises, and ultimately should allow you to have more money left over at the end of every month to save and invest for your goals, so you can start building wealth and become that multimillionaire and have the financial freedom that you desired when you opened your business. If you want to see a case study breakdown of how long it could take you to reach $1 million net worth, go ahead, check out this video next.